Everybody keeps asking, when will rates drop? But here's the problem. Even if they do, waiting is most likely gonna cost you tens of thousands of dollars. In this video, I'm gonna explain exactly how. Let's dive in.
I've been up a couple days, I wonder why. I've been living in a haze, what a foolish life.
Now, I'm not guessing here. This isn't YouTube clickbait. I ran a real cost of waiting analysis so that you can see exactly what happens when you delay buying a house. Because right now, most people are focused on rates and completely ignoring everything else that actually drives the numbers.
What you talking about, Willis?
So first, let's have a reality check on rates. Will they drop? Yeah, probably a little at some point, but a meaningful drop, like back into the low fives, the fours, or how amazing would it be, the threes or twos? We have a better chance of landing on Mars this year than seeing those rates again. Here's why. Inflation is not going away. In fact, it's ticking up. We have massive government debt, and the global economy is putting pressure on the bond market. Nobody wants to buy US debt anymore. So yes, at some point, rates might improve slightly, but that doesn't automatically mean that waiting puts you in a better position. Let's take a look at the actual math. Here's a real scenario. Buying a house today at $600,000. If you were to wait 2 years, that same home is projected to be worth $654,000. That's $54,000 in appreciation. Now here's where people are getting it wrong. They assume, well, rates will be lower in the future, which means that my monthly payment will be lower in the future if I wait. But guys, that only works if home prices stay the same as today. And nobody gets to be Marty McFly and go in a time machine and come back to today's prices in the future. It just doesn't work that way.
Are you telling me that you built a time machine?
And not only does the purchase price become more in the future because of appreciation, that means that your loan amount increases. That means that your property taxes increase. That means that your down payment is more. So even though rates may be lower in the future, your monthly payment will still be higher in the future because you're borrowing more. You're buying a higher priced property, which means higher property taxes.
Say what?
In this example, if you put 10% down on the $600,000 purchase, your monthly payment would be $43.39. But if you were to wait to make that purchase at a higher price, even with a lower rate, your monthly payment would be $4,500. That's almost $200 more per month because you waited, even though in this scenario, waiting gets you a lower interest rate. Because again, guys, the interest rate is only one piece of the equation that determines what your monthly payment is. So you waited, you took on more risk, you had to bring more cash to the closing table, and your monthly payment is still higher even though you get a lower rate, assuming rates come down in the future. This is why you keep hearing people say that annoying slogan, marry the house, date the rate. Now let's zoom in on this because it's not just about the monthly payment. When you wait, you lose out on appreciation. Like in this scenario, on a $600,000 deal, you lose out on $54,000 in appreciation over a 2-year period. You also lose buying power because the house that you can afford today is most likely not going to be the house that you can afford in the future. Because again, guys, I just showed you the math that waiting for a lower rate only works if home prices are frozen in time. You also lose your leverage because instead of negotiating today's price, you're chasing the future price. Now here's some other things that people completely ignore, but this is where the real decisions get made. When you own your home and have a mortgage payment, part of your payment is interest, which is often tax deductible. So your true cost of owning the home is actually less than it looks on paper. When you rent, zero tax benefit. And speaking of rent, people compare today's rent to today's mortgage, but that's not the reality. Rent typically increases every year.
The rent is too damn high.
Whereas a 30-year fixed mortgage, the payment stays the same for the life of the loan, so you're effectively locking in your housing expense. So while your mortgage is relatively stable, your rent keeps going up. And that means that the gap between rent and mortgage that most people focus on diminishes over time. And in fact, at a certain point, it costs you more to rent than it would have if you owned the home for years. So the mindset that you should have is that you're locking in your housing expense versus being subject to future rent increases. And let's talk about stability. When you own your home, you're in control. When you rent, you're not in control. Your landlord, they can raise the rent, they can can sell the property, or they can decide that they just don't want to renew your lease. And now you're scrambling to find a new place to live, most likely at a higher rent rate than what you previously had. And that's not just a financial risk, that's lifestyle instability. So this isn't just a rate decision, it's a price decision, it's a timing decision, and it's a control decision, because you can always refinance later if rates ever drop, but you can't go back in time and buy a home at yesterday's price.
Wednesday, October 21st, 2015.
So what are the smart buyers doing in this market? They stop trying to perfectly time rates. It's impossible. I do this all day for a living. I can't time them myself. They get in when the numbers make sense. Obviously, don't buy something that you can't afford. And then they improve the loan later if the opportunity becomes available. Hence, marry the house, date the rate. So instead of asking, when will rates drop? You should be asking, what is it costing me to wait? Because once you actually run the numbers, the answer is usually a lot bigger than most people expect. If you want me to run this exact analysis for your scenario, click the link in the description and I'll break it down for you so that you can make a decision based off of math, not the headlines in the news. And if you like no BS mortgage advice, make sure to hit that like button, subscribe to the channel, and I'll see you on the next video.